Hello, everyone. Happy Tuesday evening. We're still waiting on a few participants, but to stay on time, we'll go ahead and get started. Thank you for taking some time tonight to join us for our first Biz Talks of the fall semester. I am Candace Wagner, the Continuing Education and Special Programs Coordinator for the Wisconsin Dental Association, and I'm excited to welcome all of you to Accounting 101 with BMO Harris Bank. We are incredibly appreciative of their support and look forward to learning from Josh in just a few moments. As a reminder, this presentation is being recorded. So we ask that you keep your computers muted and you turn off your video. And we encourage you to use the chat box at any time during the presentation to ask questions. Accounting can be a robust topic to learn. So Josh is more than willing to pause and answer questions as we go along. As mentioned, this is our first Biz Talks of the fall semester, and we hope that you consider joining us for Digital Marketing 101 in October on the 12th. You'll be able to find all of the registration information at WDA.org. Now, without further ado, I am very excited to introduce tonight's speaker, Josh Rochambeau, Business Relationship Manager for BMO Harris Banking, Wisconsin. Josh graduated from UW-Oshkosh with degrees in finance, pre-law, and Spanish. Prior to joining BMO Harris, Josh was a wealth advisor focusing on retirement planning for business owners. Since joining BMO, he has been working on business clients for the last 7 years throughout the state of Wisconsin. And without further ado, Josh, the computer screen is yours.
Candace, thank you very much. Appreciate the introduction, and thank you all for taking time out of your Tuesday evening here to be with us here today. Let me try to share my screen here with everyone. Hopefully they can get in there. Can everybody see my screen okay?
Gotcha on my end.
Perfect. All right. Well, tonight, just we kind of want to go over kind of a little bit of the Accounting 101, some of the main financial statements that are very pivotal to your practices and really understanding the numbers, I guess, behind what's going on in the day-to-day and year-to-year operations. Obviously most dental practices really don't fail because the owners really aren't passionate about their practice. It's really just having a lack of understanding the financials. And a lot of it is no fault to anyone's. It's an accounting error that, it's numbers. Most folks are concentrating on their clients as they should be on their practice. So that's why it's a very pivotal point to be working with the right accountants, the right financials, the right bankers to give you the tools and to give you the resources there to help when need be. So today, really just going to be talking about the three basic financial statements, which is the balance sheet, the profit loss statement, and the cash flow statement. And then after those, we're really going to dive into the business plan and why it's a must-have for your practice. Not sure how often anyone's really updating a business plan, or if they've adopted a business plan for maybe a previous dentist or a previous practice. Just kind of go over an overview of that business plan, that business model. Then we're going to wrap it up with the financial tips to ensure the success of your practice, and just kind of go over some of the things that we're seeing out in the field, and to go over what we see day to day in the industry, kind of with the economy that we live in today and the uncertainties that lie beyond us. So really just getting into the basics of the financial statements, really understanding why it's important for your practice, really to know it's the health of your practice itself. So realistically, we always call it your financial dashboard. It really lets you know where you are at a certain time, quarterly, annually, making sure that your bookkeeping is up to date, it's accurate, making sure that your business accounts are well established, your checkings, your savings, lines of credit, credit cards, etc., stuff like that. Making sure that your online banking, if you have treasury solutions, ACHs, all the things that go into an adequate bookkeeping is there for your resources as well. And the biggest thing is leveraging financial software. Using QuickBooks is a huge tool to help with these transactions, with the accounts. Most financials, BMO included, we use a online banking software that is very compatible with multiple different accounting softwares out there, whether it be QuickBooks, even some sort of CLA accounting or softwares themselves that they have in there, primarily for dentists. The softwares and systems speak to each other, so it's just a really easy transition for when you need a quarterly statement or an annual statement as well. Why is it important to keep an accurate picture of your financials? Really understanding, obviously, how you're making and losing money, right? How profitable you are. It's important to know your cash flow. It's important to understand your practice's expenses, your collections. This will ensure and help, not only just your accountants, your CPAs, your bankers. It really lets us know how you're doing. From day to day, you're typically seeing clients and seeing patients, running around the office. It's not something that typically we expect that, our dentists they got some time in their day, they're going to be looking at their balance sheet or profit loss statement. That's unrealistic. But the biggest thing is to understand that, what your goals are. They're short term, they're long term, making sure that those are always coinciding with your practice. And that's where these financial pictures and your financial statements really help paint the picture for you on that. They can help with staffing changes, if you need to do any type of pricing adjustments, if you're looking at adding a partner possibly, or possibly retiring and maybe passing the practice down to junior partner, something along those lines. These are all areas where the financial statements really come into play and can really benefit your practice. So getting into it right away, we're going to talk about the balance sheet and understanding really what goes into the balance sheet. It's mainly just a snapshot of where your practice's finances are at a given point. Typically they're done quarterly. Not too often you get them, month by month, but typically quarterly or annually. And it really just keeps track of your assets, what you own and your liabilities. And we'll go into a little bit further here, what encompasses both of those. And then your equity. So basically it's your assets minus your liabilities, and that's your equity. And obviously there's a accounting equation here listed below, but your assets, to go into that, your current assets, and that's considered all the convertible cash within 1 year. So your accounts receivable, your cash on hand that you have in the banks, and your inventory, those would all be considered current assets. Moving to your long-term assets. So those are long-term assets, or we call those fixed assets. Your fixed assets, obviously, then are not going to be converted in within the first year. Those are long-term, equipment, your buildings, land, long-term investments, stuff like that would all be considered a long-term asset. Switching gears into our liabilities here. So current liabilities, those are all paid down within a year. Accounts receivable, any short-term debts such as like lines of credit or credit cards would all be considered current liabilities. Your long-term liabilities will be paid off within a year, which will not be paid off within a year. So typically your mortgages, any other long-term debts that might be outstanding, maybe shareholder loans or practice loans paying back, stuff like that typically will be going into the long-term liability section. And the equity is just a difference between the total assets and total liabilities here. So sometimes equity, might be referred as common stock, retained earnings. All those things will be referred here into the balance sheet as far as the equity goes. So here's just a snapshot of what a balance sheet looks like. it's important to know really, your accounts receivable, your cash, obviously your inventory, all your assets, everything on the balance sheet. It's important to have an understanding of knowing where they were from one time to another. Like I said, it tracks your practice's finance at a given point of a time. So knowing where you were in September 2019 compared to September 2020 and looking into 2021, you can compare balance sheets as far as where you were there and where you are now. And then you can align that with industry standards and see how your practice is doing. And are you falling in line with industry standards? Are you maybe falling a little bit behind? That's really where this balance sheet and figuring out some of the, what the bankers will be doing is figuring out, those ratios to see where you are. And it's important that you understand exactly, hey, where are you at with your cash, cash on hand, your real estate, how long did you, for your buildings, have you paid down a lot of loans in the recent years, or if you paid off loans? Those will all affect the balance sheet equally. So moving to the profit and loss statement. So your profit and loss statement, this is really the financial statement that really gets more attention than the other two, mainly because it's a little bit more exciting because it tells us, are we profitable? Typically, we call this the income statement. It tracks our revenue, production and sales, and the expenses. So that's really important and can really tell us a story of where our expenses are going. And will ultimately just let us know if the practice is profitable or not, and be able to compare that year over year. So we really use the profit and loss statement to make changes or improvements that we might be needing to make going forward. If it's supplier changes, pricing changes, sometimes industry trends, if production is going up or down, track progress to your practice goals. If you're looking at potentially adding in a new admin, a new hygienist, maybe possibly expanding with another partner. All of those things are viable to kind of understanding where you were in the previous years to where you are now, and is that a realistic goal to have here in the future. So keep in mind the profit and loss statement represents revenue and expenses. So it's over a period of time, whereas the balance sheet really shows you, realistically shows you where the financial condition is at a point of time. So, when you're looking at your operating expenses, such as your rents, utilities, and supplies, sometimes experiences in net loss in operating expenses. Sometimes you might have to cut that back a little bit. We can really look at over time, if you're paying $10,000 a month in rent, is it maybe more of a opportunity, or is it possible to purchase your building and maybe pay $2,500 a month in rent? Something like that, where we're just looking at reducing expenses if we need to, or if that fits in line with the goals of the practice. So here's what the profit and loss statement looks like. You might be familiar with this. Typically, you'll see it in some sort of form on your taxes as well. But really understanding, where the revenues are, which is revenues. Typically, we refer to that as your ordinary income, which is just your collections and less your refunds. And then you get your gross income there on the top line. And then you have your operating expenses. So subtracting your gross income from your operating expenses and your total operating expenses, typically you get the bottom net profit or loss. So obviously, if you have a positive figure here, the practice is profitable. Negative figure, the practice is running at probably not where we want it to be, or is not as profitable as we want it to be. But the operating expenses is a really good opportunity for us to just kind of look at to see where those expenses are going, where the rents, where the utilities are at. Insurance is a big one that might fluctuate from time to time. And a lot of times we don't really look at that because maybe that's the insurance price that it's always been, and we really haven't dug into it. Well, why is it that much? If that's a number that really sticks out to your accountant or yourself or your banker, that should be something that they should be discussing. Same thing along the same lines as, your dues and subscriptions, your licenses. If you see a jump in that year over year, well, why is that? And really understanding where that expense came from, and is that something that is sustainable going forward, and especially year over year. So that's going to really help determine how profitable we're going to be next year compared to this past year. So that's the profit and loss statement. And like I said, this is probably the more focalized financial statement that we have, just because it tells us the more exciting thing, right? It tells us if we're profitable, and gives us a little bit more information that we'd be looking for here. Oops. And then the cash flow statement is the third statement here that just wanted to touch base on. Very important as well, because this shows us how the cash is moving throughout the practice itself. The inflow, the outflow, how the cash is getting moved in through the deposits in the bank, the short-term investments. Really shows us where that cash is being spent over a given time. So typically, most accounting softwares, QuickBooks, you can have everything in your bookkeeper can enter everything accurately, and there's a couple buttons you push. You can pull up a cash flow statement relatively fast. Typically, you get them in a snapshot of time, a 6-month or 12-month period. And sometimes it can be negative. And is that necessarily a bad thing? Not necessarily, but it can be, because it shows us your liquidity, where the cash is coming in and out of. Some months might have more expenses than other months, but it really acts as that bridge between your balance sheet and your profit loss statement, and really just shows where exactly that money is going. And there's three main primary categories here, which is your operating activities, your investing activities, and your financing activities. So your operating activities is mainly just the cash flow that you generate through your practice, your collections, your sales, inventory purchases, stuff like that. Cash flow from any other activities that's not investing or financing, from current assets, current liabilities. Those are all be listed under your operating activities. And switching to that investing activities here, cash flow from the acquisition or disposal of long-term assets. So again, that's purchasing, selling equipment, real estate, could be practices, other investments that maybe not included in quote unquote cash itself, more of an intangible asset there. Financing activities. So financing, it's cash flow that results in changes in the size and composition of the contributed equity capital, borrowing for the practice, borrowing and paying loan, stocks, bonds, dividends. Typically, you'll see these more in partner practices. Realistically, you shouldn't see too much of this in a single dental practice, but that's something too that typically, working with your CPA, they can kind of analyze where the bonds and dividends should be going to year over year. This is what the cash flow statement looks like. So you get your net income, you get your additions, depreciation and amortization are always an add back in the accounting world. So we always add those back in as net positives. So when we were talking about the income statement or profit loss statement, typically those are always going to be two add backs to that bottom line. Increase in inventory, increase in accounts receivable. Those are all going to factor into your net cash from your operations. Cash flow from investing, purchases of long-term assets, practices, equipment, real estate, items like that are all going to be tied into that section. And then the cash flow from financing, issuance of debt, issuance of equity, repayment of debt, payment of equity, those are all going to get factored in from the net cash from financing. So this is a snapshot of what the cash flow statement looks like here. And it's important and kind of to tie all three of these here together and why it is so important. And it really fixes into if I can get back to, it's kind of showing kind of industry standards. So this is where, most CPAs, accounting, any accountants and bankers that are sitting down with you semi-annually or annually, we're taking this information from these statements, from your profit and loss statement, and we're comparing it to industry standards, and we're really comparing it to your goals. What are you looking at doing? Are you looking at, possibly slowing down? Are you not looking to take on any more clients? Are you looking at maybe adding a partner or adding a couple new key employees? By looking at these numbers on the financial statements that we just went through, these are all kind of the ratios, and this is accounting 101 by no means. I don't know how many accounting classes I've taken, but I did not know any equations. I don't know how to compute any of this, so I would never expect to know that. But these are just what we should know to benefit for you guys. But it's important to know what's in those financial statements, that we can tie these numbers back to the actual financials themselves, to tie that into how the practice is doing, and to give you an overall snapshot of where everything's going. And is it on course? Is it acceptable? Like I said, most days you guys are running around seeing clients. The last thing you want to do is dig into your balance sheet and profit loss statement to figure out if the year is going well for you or not. So these are the three financial statements that we like to go over. Like I said, the profit and loss statement is typically going to be the main one that really attracts us, mainly because it shows how profitable we are, and in essence, that's going to show where our areas of opportunity are. Are we going to be able to possibly lend to money? Are we going to be able to expand the practice? Are we going to be able to add those couple key new employees like we're looking for? Or is that something that, we were hoping was a 6 month to a year project that might be more of a 2-year project? So those are all the things that these financial statements can tell us. So that's why it's nice to understand what's going in each of those statements, where you can reference that and have some familiarity with what exactly is going on inside those.
Josh, before you move on, we did get a question in the chat.
Yeah.
Randall had asked if we can discuss Ebitda, or earnings, for the folks on the phone, earnings before interest, taxes, depreciation, and amortization, and how that fits into the three financial statements. So really wondering, why is it important to know what that is and what it shows?
So let me see. So mainly just going over Ebitda and why is it important to understanding Ebitda itself? Right.
And what does it represent? Good.
Gotcha. Yep. So Ebitda is a key factor for financials, the really understanding, where you are at, if you're looking at getting some financing done, where you're at currently, and understanding exactly how much debt you can take on. So this really shows financials themselves is the debt that they're looking to acquire. Is it something that is acceptable? Is it within the bank's policy? Is it a big risk mitigator or not? So to go kind of through, let's see if we still have this up. Yeah. Oh, sorry, I think my computer froze slightly. Does that kind of answer your question, or?
There, I see it on line 34 there, at least, Josh, for the ratios. But so simplistically saying Ebitda, it really shows how profitable your practice is from your core operations, right? Without taking into consideration those items such as interest, tax, depreciation, amortization, all those items that Josh had mentioned and kind of called out as we were looking at the at those financial statements.
Yeah, I'm trying to pull up here. All right. Was there any other question? I'm sorry, I can't see the chat right now.
I do see there was a hand up. Tom, looks like Tom, you might have had your hand up for a question. Tom Volker. I apologize if I'm mispronouncing your name. It's like I don't have the ability to unmute you. If you have a question, feel free to type it in the chat.
Okay, I think, is there, that's like continue here with the business plans and conversation around that. And we can kind of circle back if we get questions here in the chat. Okay. All right, so business plans here, and I know I was talking to a couple of my dentists here that I cover, and I asked this a lot to them. I even spoke to a couple of folks here yesterday at the golf outing, and really just asked when's the last time they've updated their business plan, and you get a mixture of answers, between I've never really done one. I've really just kind of gone off of what the whomever's practice they took into consideration and just kind of did what they did. So really understanding, your practice and what you want to do, because if you are buying into a practice or you're joining an association, whatever the case may be, you really want to have your clear-cut underlining of what you want to do. Do you want to see as many patients as you can all day and leave more of the administrative managing, on the side? Do you want to do a little bit of both, or do you want to maybe work up to where maybe all you are doing is managing? Now that's probably not ideal, but realistically, that's the importance of having your business plan, because it really focuses on your goals, right? So it really helps in a number of different ways. It helps to really outline and paint a picture of really how you're going to manage your practice. Shows that you know your competition, knows your market. It's really important because if you're looking at adding on a new practice or a new partner or a new associate, really outlines the details in that as well. Motivating your staff right now. I mean, obviously it's very competitive out there. It's important for retaining employees. Realistically, how feasible is it to start a new practice or expand on that practice, if that's where your goals align? And then also raising financing from lenders or possibly investors, right? So it really outlines to your banker that you have a very clear-cut understanding of your practice and what you want your practice to look like, and maybe the direction that you foresee your practice going. Typically, I always say updating your business plan, regularly. Now, regularly is kind of a loose term. I would say, you know, every couple of years, when changes are about to occur, or you want changes to occur. You know, if you're looking at expanding, or you're looking at adding some new equipment or no new employees, these are all times that we should really be kind of taking a step back, reevaluating our business plan, and making sure that that is in alignment with, you know, what our goals are. So to kind of help just, you know, talk over, you know, a business plan, what goes into a business plan, what most financials would be looking at in the business plan itself. There's 10 different items here that I'll kind of go through. So it's important to know this, because I've read probably thousands of business plans from various different industries, and it's always interesting to read ones where the author of this business plan might know exactly, you know, what's going on, but if you can't, you know, it's not outlined in your business plan, it's tough for, you know, the reader themselves, the banker, the investor, the potential new partner, to really get a gauge for, you know, if that's going to be in alignment with their goals, and if that's what they're really looking for. So the first thing is really just describe your practice. You know, introduce your practice, experience of it, perhaps its patients. You know, what type of practice is it? The location, why you started, or how you ended up where you were. What separates your practice from other practices in the area? What separates your practice just in general? You know, is it your dedication to your clients? Is it, you know, retention of families in the community? Stuff like that is really what you want to describe your practice itself. And then moving on to explain your business model and operation plan. So this is kind of something where not too many folks are very familiar with that, because it's really not something that is discussed or talked about unless you're maybe taking on a new practice from an existing practice, and you're kind of molding your practice with this new practice. So a lot of things are kind of taken or have worked for this practice, so we're just going to adopt that into our practice type of thing. So a lot of it is you know, services. You know, what are you going to offer? What do you want to offer that's not currently being offered? You know, explain the day-to-day operations of the practice. More clinical? Is it going to be more procedural? Administrative times, you know, during the day, is that realistically going to happen? Probably not. You know, is this going to be something at night that you want to, you know, spend all day seeing clients and then spend the night doing administration items? Typically, you know, having some sort of time blocks to understand your practice it's a key piece of the plan. Knowing if you're going to be doing emergency procedures, those are all items that you should be understanding and be willing to discuss, or being at least open to if competition is where it is in the area. And focusing on your financials in your business plans. This is really where these financial statements come into play. These really help with the forecast. So when you look at your cash flow statements, you know, you can take where the cash flow statements might have been in 18, 19, you know, comparing them obviously in 2020, we're shut down. You know, how does that, you know, 6 months of lost revenue, how'd that impact your practice? How do you bounce back in 2021? You know, and this isn't something more in the business plan, but just something that, you know, understanding of, you know, your clientele. Is it more, are you looking at expanding? Are you looking at maybe more just friends and family coming in for new clientele? You know, is that how you plan on growing cash flow wise, or is it going to be pretty stagnant at where it's at? And really understanding that for the, you know, typically the first 2 years. Now, we always say the first 2 years of financial forecast is because, you know, when you first get, there's a couple different reasons. The one on the financial side of it is typically most financials won't lend to you or give you a startup loan or business loan or a practice loan unless you have a good understanding of those financial forecasts. If those forecasts aren't accurate or maybe far off from some industry standards, it might be tough to get financing. So it's important to really know, where those forecasts are and have pretty accurate predictions on where you think that the practice is going to go. If you're looking at getting, a loan from a bank, it's important to really understand how much and why and how it's going to be used in your budget, right? So it's important to really outline that in your business plan. If you're looking at, getting some new furniture or some new equipment, some x-ray machines, whatever the case may be, this is outdated or this is something that we could maybe use a new piece of equipment on. Having that, that figure outlined in your business plan, or at least forecasted out, it's important to have that in there as well. And then talk about your team. I mean, obviously, it's all kind of a team effort here, right? Your hygienists are here, you're there. Your clients are seeing, everybody from walking into the door. It's always going to be a team effort, and understanding, just the management experience that goes into your overall practice. So it's important to share your professional background, explain why you're qualified, explain your experience. How has your practice gotten to where it's been here? How has it gotten to its success? Or are you looking at maybe adding a couple of new admins? Are you looking at adding hygienists? Talk about your staff, talk about your partners, your associates, the number of years they've been practicing, where they came from, and all those things give a clear picture on just the validity of your team itself. And then obviously the responsibilities, and you want to obviously talk about, how they're being compensated. So it kind of goes to the competitive factor of, what is your practice going to offer to stand out from the practice down the road or the practice in a different county? Those are all things to kind of be cognizant of when you're talking about your team. And then moving into discuss your market and customers and competition. So that kind of segues right into that right away too. So understanding your target patients, understanding if there's, two big manufacturing companies that are located in the town that your practice is in, understanding, net new clients, understanding community-wise, is it a growing community? Is it a smaller community that's, outside a bigger city type of thing? And how are you going to communicate them and retain them, right? I mean, right now, I'm sure everybody's kind of seen that where, some communities, it's hit or miss. Some people are still, might be a little bit, they might feel unsafe coming back to, to see the dentist, whatever the case may be. How are you going to communicate them and to get them back, especially what we went through in 2020? Understand your market size. Like I said, the geography, are you taking advantage of, yep, this is where the biggest manufacturing companies are. This is a growing community. There's not too much competition as far as a dentist on every corner. And if there is, if you're in a town of 100,000 people and there's, 20 different dental practices, how are you going to differentiate your practice from those competitors? What really makes you unique? What are you going to be offering? Is it just above and beyond customer experiences? Is it, that family care? What is it that's really going to separate you from everybody else? So realistically, I mean, you can go online, you can look at free resources to build out your market research. The SBA is a good resource to kind of have to market and research that, those resources themselves. And create a marketing plan. So really, what are you going to do to market and to attract your patients? Is it going to be on websites? Is it going to be on social media, emails, flyers? You know, are you going to be old school, go door to door? What really is going to separate you from other practices, but also give you that marketing advantage? Are you going to have offers for new clients? Are you going to have offers for existing clients? I keep saying clients, and I apologize, it should be saying patients. So looking into these here, we break down a business plans. This is more of a business term here, this SWOT analysis. I'm not sure if anyone's familiar with it here or not, but realistically, it's really just a snapshot of your practices, and SWOT stands for obviously your strengths, weaknesses, opportunities, and threats. So it kind of shows you a 360-degree view of analysis of your practice, really. Really tries to mitigate the strategies of any weaknesses or threats, you know, expansions, you know, opportunities. You know, a couple dental practices in the area have older dentists that are looking to retire. There might be opportunity to gain their book of business, get some of their patients as well. What type of opportunities exist throughout the current practice? So those are all things to be very cognizant of, to really understand what, you know, how your practice is going to look, and what you really want for your practice at the end of the day. So an apex in the business plan. So this is really, it's kind of the what other else is out there, information that you really haven't added into your business plan yet, but feel like it could be important to know. You know, is it an expansion for the current place that you're operating out of, or is it a new building? Is it floor plans? Is it a list of new equipment? A list of software potentially, right? So these are all things to kind of outline in your, you know, appendix of your business plan. I mean, obviously, number 9 is kind of that goes without saying. I mean, obviously, check for errors, proofread it. I mean, like I said, I've seen read business plans for anywhere from on napkins to sticky notes to 150-page Word documentation. So the thing is that it's yours, it's unique, it's something that it's your vision, it's your goal. So it's important to outline that goal and be as specific as you can for that reader. So we do have on our ada.org, there is a business plan on there as well that I believe we did send out, that kind of just gives a free template on just kind of how you get started. And the number 10 here is review it, update it regularly. And like I said earlier, and what's regularly, you know, we look at that as just really having a good understanding of what's going on. If you're looking at growing, if you're looking at adapting, you know, some new practice, some new information into your practice, if you're looking at expanding into getting a new, maybe adding another doctor, adding a hygienist, whatever the case may be. But try to keep it as current as you can, because obviously you never know what's going to happen. You never know what's going to happen in the future. So it's important to really know, you know, annually, does your model and your goals align with where you're currently at as far as the plan goes? And that's where those financial statements really come into play, is understanding, well, these are where the numbers are, and the numbers don't lie, and are these on course with where we want to be? So that's kind of everything that encompasses, you know, having a business plan itself. So for the financial best practices that I usually recommend to the dentists that I help out, obviously keeping separate bank accounts from your personal accounts and the business itself. But the biggest thing is to have a good online tracking, have an online banking system, be able to bill pay, ACH, you know, have it, make sure that it works, and it works for you and it works for your practice. Make sure that the solutions that you have out there are the best that's available. Some folks have been operating under some, ancient softwares, and that can definitely hinder the performance of the practice, right? So, using, remote deposits on your online banking, having the most updated reporting systems on QuickBooks and adequate bookkeeping. Those are all things to kind of making sure and keeping up to date with your practice's financials. Hire a qualified accountant. And obviously, I work a lot with CLA. Great, teamwork with them, and really just being, your financial team that helps out to make sure your goals align with where you're at, or if maybe you're not quite where you're at, what can we do to adjust some things to get to where you're at? And it's important, it's not just at tax time. Like I said, most of my clients, we were seeing each other, quarterly, at least touching base quarterly, if not semi-annually, and just to make sure everything is going according to plan. And making sure, obviously, you track all your expenses, because that's going to be a big indicator of our profits. We're going to be able to maybe alleviate some expenses, maybe lower some that maybe aren't as needed, or maybe get a little bit better discounts on some of the things that we might be overpaying on. Talked a little bit about the accounting software itself. The dental software, that can be a huge change, but then it's also important that, you make sure your team members are very well trained on it, because obviously the most updated software might be great, but if the team doesn't understand how to use that software, it's obviously almost obsolete or unsuccessful. So, but accounting softwares, like I mentioned, QuickBooks, there's FreshBooks out there as well. Most financials, like I stated earlier, will be able to talk to these accounting softwares. So you'll be able to pull right from your online banking into these softwares and be able to compile most of these financial statements rather quickly. And I sit down here, review your financials at least monthly. Obviously, running a mile a minute, it's not like, this is a monthly expectation, but it's good to review them, as often as you can. I always tell my dentist, quarterly is kind of what I would recommend, but, paying attention to the revenues and expenses, because going over that annually, semi-annually, it's important to really find maybe some areas of opportunity, or find those areas that are going very well for us, that we can kind of hone in on and capitalize if that fits our goals and if we want to look into grow. But also, work with your accountant, work with your banker. Those are, the financial folks that should be on your team to give you the guidance. You guys are the dentists. You guys are the professionals when it comes to that category. The folks that do the exciting crunching of the numbers and breaking down all the tax information. Those are the things that go to them with the questions. By all means, it's something that we're here to help all the time. So that's where something that just to be cognizant of, most bankers, myself included, we really don't put off work at 5 o'clock. We're available to most of our practices kind of whenever they have the questions, right? So with that, I will kind of leave it up to any questions and see if I can get back into this box here.
There was one question, Josh, that came in the box around computers and technology and so forth as it relates to operating expenses. So I put it in a brief response, but certainly feel free to elaborate.
Okay. Yeah, that's the biggest thing, is just the life expectancy of them. Technology is a touchy one. I know I argue with this a lot with accountants because, I almost look at technology that it's changing so rapid year over year that it's almost a short-term expenditure, but they typically will always look at that as a long-term. So yeah, here's just my information. Here's some resources as well. I believe everybody should have this template, the business template that's on the ADA itself. Here's my direct line. So if you have any questions, want to contact me directly, by all means, feel free. You can text, call, and there's my email below as well. So you can shoot me an email whenever works. Like I said, most often I'm kind of working into the night. So whatever we can do to help be a resource for you in your practice and help guide you along. And then, BMO Harris Bank, we are part of the ADA. We do have our, Advantage program here and offer, special discounts. And so we do greatly appreciate the partnership with the ADA. So if we can help answer any questions and help your practice, we are more than willing to do so. So I kind of wraps up whatever this presentation that I had here, just the accounting 101 side. If anybody has any questions or wants to touch base, or you have my information here, you can let me know.
Well, thank you, Josh. It's Candace here from WDA. I thought this was very informative. Like I said, accounting is a difficult subject and it's not easy to grasp. So please feel free to reach out to Joshua. I will include his contact information tomorrow as well when I follow up with all of your certificates. I know sometimes accounting questions too can be hard to ask publicly. So you can do that privately tomorrow if you need to. But if there aren't any further questions, we'll go ahead and wrap things up so everyone can get on with their evening. Looks like we're good. Awesome. Thank you, Josh. Thank you, Amanda. BMO Harris.
Absolutely. So much. Just wanted to say thank you again and hope everybody has a great evening.